The more successful one always put their decision in questions and cross-check, so they are never giving anything for granted. What I saw in our most successful entrepreneurs is that they are really able to put together ideas from themselves, from the experts, from their team, and taking the decision consciously. At the very beginning, you bet a lot in the technology, into the leading team, into the founders. In the first hours, you can already distinguish what we call the super nerds, people that are so much in love with their technology. It's better for them to stay in their lab and to do research. So sometimes there is a natural selection that maybe favor the more outspoken founders, and maybe they leave a bit behind the more introvert or more reflective founders. You risk really to miss some of the opportunity, in my mind.
Today we are here in Torino starting our Giro d'Italia. We are sitting in the office of Alberto Emprin, and we will go through what he does, what the Italian ecosystem looks like for us in the material and composites ecosystem. So thanks first of all to welcome us in your office, Alberto. We met first time pre-Jack World 2026 through LinkedIn, I assume.
Yeah.
To start with, could you share a few words who you are, what you are doing here, and then we will jump right away into the Italian ecosystem.
Yeah, very shortly, I'm a mechanical engineer. I studied here in Torino, and then I spent the 21st years of my career working in the automotive and automation fields. I work a lot already with materials, because in automotive I was responsible for body-in-white welding. So I always worked in robotization of welding process, and in that case steel and aluminium, especially aluminium, was emerging as material. Then I worked also for a Swiss company called Bistronic that do laser welding and laser cutting as a main activity. About 15 years ago, I started my own company, first a consulting company that were looking at manufacturing technologies abroad to be brought to the attention of small and medium Italian PMEs. Again, in that case, the subjects of the technology transfer was mainly in new materials, new process of existing material like steels and aluminium, as well as quality control. And by doing this, I started also to get in contact with some startups, especially in France. I work and used to work a lot with France. Started to make some business angel investment in some startups. And from there, the let's say investment side took the majority of my time, little by little. So first I acted as a manager for an investment vehicle of a family office based here in Torino. Later on, I created Excelli Solding, which is a company that invests in a deep tech company founded by Italian entrepreneurs abroad. And finally, now we are starting a full-fledged fund with the same investment thesis. Investing in materials is something that we are not looking as a main purpose, but as a matter of fact, a lot of innovation is also coming through materials, and in some cases also some through composite material. Like an example, I mentioned you before this chat.
Yeah, oh, perfect. I mean, thanks for introducing yourself and how you moved from engineering to investing. I mean, obviously there is some crossover. And what is so exciting for you in investing with your engineering background? Why did you kind of switch the path a bit?
Well, if I can really make it a long story short, for 20 years I had to sell something that I have not chosen, but was okay coming out from the research and development departments or the manufacturing departments of the company I used to work for. And the idea of going more to the source, to the moment in which decisions are made, and betting that this decision will lead then to have success or not on the market, is what really is intriguing more myself, and also saying, well, if I see a coherent pattern that brings from the lab to the market, and I can maybe having the sensibility to detect this earlier than other people when still the technology is in development, but maybe a lot of decisions that are taken in that specific moment can then lead to the success, the failure of the company. This is a bit the added value that I think I still can bring to the table, and this is why early stage investment is what attracts me more, rather than maybe investing in more mature technology or in scaling up. Also because it's honestly more at the gasp of small capitals that can invest early stage, and really having the opportunity to participate, especially to the early stages of the development of the companies.
So you mentioned early stage investment. Obviously, you are now building a full-fledged fund. What is the thesis of this fund?
It's a 25 million fund where we are investing, I would say, not as a spray and pray strategy, but a quantitative strategy, 10 investment per year, about one investment per month with a ticket under 50K in the early stage company that may raise around 1 million, 1.5 million. So in a relatively early stage, where normally you are matching these funds also with grants, and then the capacity to invest heavily in the following round, so in the seed round, up to 1 million. So actually, our fund schemes is set to invest about 75% in following on rounds and 25% in the first round. Still, the first rounds are the rounds in which we really pay, let's say, a ticket to enter into the company, understanding the potential of the technology, but also the skills and the behavior in terms of capacity to shift from a scientist to entrepreneur of the founder or the founding team. And we are ready to pay this amount in order really to get into more into the dynamics of the early stage companies, and to then decide with much more comprehension of what the startups is doing, is moving toward, and then decided to invest more in the later stage. So this is a bit the strategy. And is more or less a strategy we have followed in other contexts, also as business angels. So at the very beginning, you bet a lot in of course, in the technology, but in the end, you bet a lot into the leading team, into the founders, and has always been the case, because of course you can look at the IPs, look at the background, but really is the way the entrepreneur, the founder is looking at the environment, especially the industrial environment, that gives you, yes, he will have a chance, or he will have hard time to really to go through the shifting from the research to market. Sometimes you can always say, oh yes, but at a certain point you can always hire maybe you can hire a sales guy, somebody that's coming from the market, and this probably will need to happen. But still, if your approach is only technology driven, and the approach that the market will learn to appreciate our products, our approach, normally is not working. So we want to go for from the very beginning to evaluate the founders to the side of the technology, but I would say the founder or the founding team for us, it's more than 50% the value of the company we invest in.
And you are mentioning a good point, evaluating. So basically, we are speaking here to eventually future founders. How are you evaluating, or what should these founders and future founders bring to the table and send to you, so that you basically assess their dossier or the opportunity?
Well, a little secret is the fact, because we invest only in Italian founders abroad, we have a kind of limited range of investable company, maybe 60 or 70 per year. And this allows us to really to get to know each founder, at least to spend 1 hour with each one of them. And 1 hour of discussion, not just the pitch, but okay, your background, how you see the company in the next step, beyond what is on the next slides, allow us already to start a bit to understanding the way of the founders thinking. So the secret is to maybe concentrating on a very specific narrow topic and having the time to talk with the founders and understanding. And I understand large funds have a lot of associates that do the first screening. I think it's a bit a pity to leave this initial phase to associate, and in the end giving a bit the randomness. Probably you this way for sure you can intercept the most outspoken, or the most those founders that have are more assertive. But it's only a part of the game, because I think also very deep and technical founders have maybe also a bright minds that perfectly understand their limits and are perfectly conscious that they need to talk to the market, understanding what the market needs. So sometimes there is a natural selection that maybe favor the more outspoken founders, and maybe they leave a bit behind the more, let's say, introvert or more reflective founders. That still, especially in deep tech in general, and material, composite material is clearly an example. You risk really to miss some good opportunity in my mind. So having the time to interact with each founder is important, and the only solution you have is really to have a very narrow focus, regardless of how you can reduce your focus. But this allows you more time to dedicate to the founders.
Right. And when you look at all the companies you have invested in as angel and now with the more structured fund, is there a common trait in those people, in those companies?
Yeah, I mean, it's sometimes, I mean, we have, like I said, we have very extrovert and very, I'm not saying aggressive, but very socially bright founders, and more introvert founders. And what's really is the common factor probably between all of them, also the more successful one, or the let's say the most successful one of the group, in general, are what have they in common is the fact that they are always put their decision in questions and cross-checking with the others if their assumptions are correct. So they are never giving anything for granted. They are always, they are always, I'm not saying they are always in doubt, but they are not just taking their judgment as the guide. So there is this idea that, okay, great investors, I made a mistake. Great entrepreneurs have kind of instinct to make the quick decision and instinct to decision. I think it may appear so, but in reality, what I saw in our most successful entrepreneurs is that they are really able to put together ideas from themselves, from the experts, from their team, and taking the decision consciously. Of course, they are always operating in certitude environment, an environment rich of incertitudes. But the fact that they are taking a decision based on as much as possible objective fact is a common trait of the startups that we are. And sometimes they are even taking decisions that originally us in the beginning say, well, are you sure? We are not really full convinced that this decision is right. And most of the time instead is the right decision, because if they are really good in asking themselves the right questions and asking also the support in taking a decision, which doesn't mean it's a kind of democratic consensus, but is the capacity of every decision I take, I'm not taking just because of instinct, but I know also the contrarian in my team or maybe some contrarian advices, and I think why this idea have some contrarians in the team, what does it mean? So are very, very good at reflecting internally before taking a decision.
And Alberto, you mentioned that you have this 1 hour discussion, let's say, which is very important because obviously you invest early stage, they don't have lots of legacy of track record. So you go to the person, their convictions, their skills. In this 1 hour, can you already check or feel if they are actually good learners? As you were mentioning, they have their conviction and ideas, but they will listen, digest, aggregate, and make something better out of it. Can you feel that in the first hour?
Let's say in the first hours, you can already distinguish what we call the super nerds. So really people that are so much in love with their technology that they probably is better for them to stay in their lab and continue to do research. Mm-hmm. But somebody told them that it's cool to have a startups. And on the other side, maybe people that are more superficial, that are maybe, they are more, they decided to start the startups because it's cool to have a startup, and they also want to try. I think that probably, I'm 56 now, and probably my generation was much more with the idea that, okay, you have to, everything you do is a kind of growth, and you have always to do, in every step of your career, you must advance and making something different. Mm-hmm. Not just different, but something with more responsibility. Today, especially young people are saying, no, I need to make a lot of experience. I need to test and change a lot of things. So it's good to change a company every 6 months. It's good to change from a domain, from going from one domain to the other. And this is, in part, is absolutely true. But it's also true that, we cross across people, founders, that in the end we question, are they really willing to bring this technology to the market, and they feel this technology, that the pride of bringing it to the market, and also the willingness but the openness also to accept that the market will be harder to reach, that will demand time, that will demand up and downs, or rather just saying, oh, it's a nice adventure, it's cool to have a startup, this material is super cool, lot of energy, but energy without stamina and conviction behind, sooner or later runs dry. And I think a lot of startups in the end crash a bit at not at the first, but at the second, the third difficulty. And deep tech is hard. I mean, you may have to work maybe 5-6 years before really finding the right point to enter the market with a good beachhead market. So it's really a matter of this type of resilience. And I think to come back to your question, in 1 hour you can at least cut the head and the tail of the different characters. And then of course if if we are interested, the discussion go on and on and on. So maybe we have spoken in the end 10 hours or more with the founder before really taking our investment decision. But at least in the first assessment of 1 hour, we can distinguish, I think, the hyper nerd and let's say the explorer or the fancy entrepreneur.
Yeah, and you mentioned resilience, and obviously this brings us to the point is, I mean, I don't know if there is a clear answer, but what is the best money to support this long time until it makes it? Because often, I mean, we know that VC funds, they have obviously a timeline also based on the LPs. So what makes a specialized fund, let's call it like that, what you have a special vehicle, so interesting for founders in this deep tech, very long timeline kind of businesses?
Well, there are two aspects. Of course, entering earlier has a lot of risk, but of course is a high risk, high rewards business. So this is also the reason why we have this approach, quantitative approach. Somehow the power law have to play there. So this is why we made, and we are on average making more investment than the normal growth fund, of course, but also a more traditional seed and Series A fund would do. The other point is that as a fund, but as a general, is the same also as a business angel. We have to be prepared to, especially in some conditions, to exit earlier, to exit even from companies that are really doing well and are growing well. So at some point in time, you have to realize that, okay, I made potentially on paper this upside, and I know that if I would keep the position in 2 years, I could even double my returns. But at a certain point, and this is a kind of already seen in a lot of companies that actually have a hard time in finding their niche at that market. Then suddenly they explode and they have 2 or 3 years of very extensive growth. And then they start to foresee a kind of a floor, a maturity. I would say 1 year, 6 months before they started to feel in this growth maturity, there are, other funds, growth funds that want to invest in more mature company that have still maybe a 2x, 3x, 5x potential. Yes. That maybe with injection of capital could scale even more, but you have to believe it then. So it's also a kind of discipline that as a fund you have to have in being able to accept the fact of exiting earlier than any other fund. And sometimes even most likely on a secondary or on a growth fund that is entering and want to clean up the cap table. Mm-hmm. It's not easy because especially if you are a business angel that invested the first time, you say, I have a company portfolio now, it's 10 years that I have in my portfolio. On paper, I made the 40x, but how can I exit? Shall I wait another 2 years and this 40x become 80x? Yes. And with this thing in mind, you never exit or you never try to exit. Yeah. So you have to have a kind of discipline and say, okay, I've made enough upside. I have LPs that are, of course, willing to have their capital remunerated. Yeah. Of course, you have to have a decent portfolio in which you have many of this situation, or at least a decent number of this situation, not just like in the, let's say, digital world, a portfolio of 20, 25, 30 startups, only one really is an hyperscaler, and all the other are in deep tech. I think portfolio, you have less risk of failure. You have a risk of failure at the beginning, of course. When you get to a certain level, you are kind of certain that if you are not working badly, you can still, through the sales of the technology or to an exit to acquisition, maybe at a not a great multiple, but a decent multiple, you can exit. You have a balanced portfolio, and I think we, with the 3LB Seed Capital, that is the holding company that I was mentioning before, for this investment, for this family office, we invested also in digital, and we had some success also in digital. But in the end, you see that almost all the startups, deep tech startups in the portfolio, are still operating today. Some of them with good success, other more in a horizontal, let's say, development. All the digital startups, either we made an exit or they get busted. So really are almost two different, I would say, almost two different asset class.
Yep.
And in VC, there is a lot of approaches that are mutuated from the digital and are not translating so straightforward into the deep tech domain.
And you mentioned obviously this when to exit. I mean, it's the topic of liquidity, obviously, also towards your LPs. And I would like to come to the LPs and then the Italian ecosystem a bit. But before that, obviously, you invest into companies, but you invest into relationships, obviously. And then you can exit a company, but you're also exiting a relationship. How does that happen? How is the relationship between you, the fund, and the founders?
Well, I think that when one point we have, as we are very early investors, most of the time, I would say the totality of the time, we invest because we are convinced of the founders and we become supporter of the founders. Mm-hmm. We are not asking a board seat. Okay. So we soon become a kind of super angel to which the investor can have confidence, maybe not calling every week, but knows that we trusted the founders from the very beginning. So at the moment, okay, things changed. Also the entrepreneur realized that when we entered into the company was 3 people, 5 people. When we exit the company maybe is 30 people, 50 people, 200 people. Everything, lot of things have changed. So I think we don't see a problem. It's not seen as you are leaving us. Okay, we understand that you invested with a certain thesis. You are an early investor, and early investors is kind of normal that sooner or later we'll have to exit. They also have investors that are expecting their money back, yes. More money to come. So no, it's never been a problem, honestly, to come out. Of course, it depends on the situation of the company, but it's here we are talking about exiting from companies that are growing well. Yes. So it's exiting from, let's say, what are not really in a kind of way called zombie company. This is another matter. But also, if a company is not performing after 5, 6, 7 years, not growing, it's the founder itself that realized that is. I mean, we never had really a company which 6 years, 7 years, but things are going to change. And a good entrepreneurs after 6, 5, 6, 7 years, if really have not really moved the bar enough, realize that something is not working also for himself. So finding an acquisition, finding an option for acquihire, for instance, all the different options are on the table. So the percentage of really founders in which we really have to struggle to continue the relationship are really a very narrow number, at least until now has been a very narrow number.
So now we spoke about relationship toward the founders, so where you allocate your capital, but the capital comes from LPs. Can you share who are the LPs? What kind of LP is going into this kind of investments?
We have in the holding company we had really a mixed group of LPs. Some have made their money and success with the digital company. They liked our investment thesis. Some of them actually made their money abroad. So in a certain way, they recognize themselves in the effort they made for starting their business abroad. So there is a kind of, let's say, natural matching between our investment thesis and what they could invest in a lot of other investment fund. Also, being an early investment fund, we also offer more contact with the entrepreneurs, putting together entrepreneurs and LPs. And this is something that has worked not as much as we expected, but has worked a little bit in the Excellis Holding venture. And we hope it will work even more now with the Excellis Holding. Again, the fact of entering to a company, not because you were brought in by another investor, but because you established a relationship with the founder, is a very strong point that allows us to say, we know well the founder. Listen, between our LPs, we have this family office from an industrial group that do plastics. So if you think that is useful for you, we can put them together into relationship, and also from the LP side, they have really the feeling that are investing really in real companies and not just in a fund that put a lot of distance between the founders and the LPs. Then, as everywhere, you have LPs that are almost purely financial, or even if they are in industrial, they have an industrial background, they match they like the investment thesis, but then in the end they do not like to interact too much with they have other things to do, and they don't like too much to interact with the company. So this is also what happened. A good thing, I may say, that the two partners in Excellis Ventures now are coming from the LPs of the Excellis Holding. So they were so excited to work to see how the company evolved that they decided to become really partners into the fund. So from LPs they become GPs, and I think this is also a good sign, and this is the way we would like to continue to work. So having LPs that are not just putting the money in a nice investment thesis, but also really bringing, if possible, added value to the whole venture.
Yeah. So it's not you have your founders, the fund, and the LPs, which are splitted. There is a community, a lively community which can interact.
And I think all funds that are very early or are coming, like in our case, from the business angel experience, there is also a bit this idea of, okay, we lead, but we, in the end, you know, some results are some facts a lot of facts in life actually are the consequence of putting a relationship to people, creating some opportunities, and good LPs I mean, see this also as an opportunity to be also participate to the results of the fund they invested in. At least this is what I hope, and this is what we are doing. We are also LPs in other funds. I mean, personally, I'm LPs in other funds, and although some is not easy, we have normally one LPs meeting every year. Out of that meeting, we try to create direct connection with. I try personally to create connection with the startups, and so maybe doing other things than just participating to a LP's meeting and understanding how the portfolio is going. So creating this further activities and connections.
Perfect. Alberto, to close the discussion, how could founders, future founders, and eventually even LPs contact you if they're interested to know more?
Well, there are many things many ways of reaching us. Of course, the easiest one is to go into our website, which is www.excellis.vc. Of course, we have this special cut to having in the team at least one Italian, no matter where. So it can be in Switzerland, in Poland, in US. We have this specific requirements, but other than that, we are working on several verticals: industrial, climate tech, medical device, medical technologies, and all enabling technologies, including new materials and composite materials. So we are really very open in getting in contact. And like I said, at least spending an hour with each Italian founder, co-founders anywhere to understand what is in their minds, how they see the growth of their company. Again, especially early stage company that have not really already raised, or maybe they have raised from few business angel, few €100,000 or Swiss francs, and are now going to raise around €1 million and above in the pre-seed, proper pre-seed fund. We have no problem in investing through convertibles or safe agreement, things like this.
Perfect. I mean, thank you so much, Alberto. We will share all this information.
I hope your trip to Italy this very hot week will be fruitful and interesting, as well as
Thank you.
Today meeting.
Grazie.